Before I get into kind of today's topic about qualifying consolidations, which bring up some interesting stuff to help visualize better some invisible levels that these edge levels are great and the visuals are better than they otherwise would be, but there's some other things that it's not just me, but other people have made me aware of that be interesting stuff to go over, and we'll do it with these qualifying consolidations. But also the FOMC, not to get into a detailed preview, but it's tomorrow. They're not supposed to do anything with rates. It's a live meeting. And they're also supposed to announce the unwinding of their balance sheet, which is, I think, 4 to 5 trillion is the area of what they're going to begin to unwind. That's not particularly bullish. The market's kind of expecting it. Here we are on all-time highs as I speak in the S&P minis, and we're ahead of a Fed meeting that might, start pulling the central bank away from their everything that they've done to inject stability into the markets. They backed off quantitative easing 5 years ago. They started raising rates a little over a year ago. They still have one more priced in for the end of the year. While this is a live meeting, it would be a surprise if they went, meaning if they hiked a quarter point. If they announce a bigger number than the 4 to 5 trillion announced, is probably bearish. If they say we're going to wait, that might be bullish. But those are just small outline on what to expect at tomorrow's meeting. The statement gets released at 1 Central. Janet Yellen, the chairwoman, gives her press conference at 1:30 Central. I get a more detailed explanation from Trade the News at about 12:15, 12:30 Central, because they wait and kind of put everything together, not too last minute, but make sure that they've included everything that might have come up to that point, including how the markets have reacted ahead of the release. So one of the things I read about it is it could be considered, while the Fed is undergoing monetary policy meeting, while no rate hike is expected, it could be considered one of the most relevant of the year. Firstly, it's known as a live meeting, the ones that include a press conference. Secondly, the U.S. Central Bank is expected to announce it will start unwinding by 4 to 5 trillion. 4.5 trillion. Start unwinding its $4.5 trillion balance sheet, not by 4 or 5 trillion. Back in July, the Fed said the central bank beginning implementing its balance sheet normalization period relatively soon, provided the economy evolves broadly as anticipated. So keep your eyes and ears focused on that. That's the highlight of the week. Usually there's an injection of volatility even if nothing comes about the meeting and everything is in line. But there's a reason why there's outliers, and the definition of surprises is because nobody expected certain things to happen. So know what those are, like a raise in the rate or maybe an announcement that they're pushing back this unwinding period for some time. Also know that the markets are pretty damn strong going into it. I mean, we're at all-time highs in this S&P. Every bearish idea is tougher to hold on to because the damn market rallies. Let's not be surprised by that. Let's not be stubborn by that on either side, whether it's a NASDAQ trade, an ES trade, a stock index trade in general. Doesn't take an Einstein to see that the bulls are pretty damn powerful and relentless. So let's not overthink that. Now, we talked a lot about consolidation, congestions, line in the sands, the middle of consolidate, all that stuff. So if you go back to the very beginning of a video I might have done 5 years ago, an edge video I might have done 2 years ago, whatever, the concepts never change. They shouldn't change. The way to look at them, my saying, better way to see the same thing, does. All right? Explanations could get better, just like anything. The concepts never change, and the dynamic of what moves price isn't going to change. It's about getting out of balance and then rebalancing, then getting out of balance and rebalancing, and back and forth it goes. It's the dynamic that moves price in any market. If there's too much of an imbalance, price is going to move in the direction of the imbalance. right? If there's too much inventory out there, price has to move, like for houses, price has to move down to balance the inventory out, find buyers for the houses. If there isn't a lot of inventory of houses and there's a lot of buyers, price has to move up to find the happy medium, right? To well, it just drives price. I can't explain any better than that. But I'm going to a pen here. Consolidation, the fights. There's been people over the course of years that said one of the greatest things that they've learned is how to define a fight, or instead of a range or consolidation, congestion, all meaning the same thing, by the way. You look at Dave, Texas Dave, we'll look at some of this with a profile, to see where a profile comes out, to see where those fights are. And that's fine. You visualize it with a PNF, whatever PNF you look at. Now, how do we talk about where the stop started? Another way to say it is where the fight is won. So inside this rectangle, you have what? You have longs and shorts duking it out. People opening up positions, or people already in a position. So it enters this fight. We don't necessarily know that the fight is going to be this box, but we can at some point during it start to outline it, right? Maybe some greens pop in, the reds pop in, the edge zones create better clarity of where the fight might be contained, all right? So at some point we draw this visual box. And yes, the middle of it's important. There's no question. We do want to know who wins and when they win and after they win and all that stuff. So if you take a look at this, we could say with the information that we have on the screen right now, we know the market's already rallied up in the upper right. We know that the fight took place inside here. We know why it's a fight. Before it entered it, there were people long and short. As it banged around in here, there were people trying to buy it, getting it, selling it, getting short, and everything else. And who won? The longs. We know that with the information we have on the screen because the price rallied. This is crude oil, by the way. So the price rallied, we know by the information we have what's in front of us that this fight was won by the bulls. Okay? Now, there's a couple things. What happened in this fight that could help qualify that the next time it comes down to test this fight back to the scene of the crime, it's going to be good support? Well, first of all, you would know it's support because price is above it. We're not looking for good resistance when it comes back here. That would be the wrong term to use. Good support when it came back down here. We talked about lines in the sand. How do we qualify what's a better congestion area versus one that's just maybe got laid out because the market was illiquid, didn't really care, was boring? You could do it with volume if you want. You could say, in this fight, the volume was decent or above average. But then you get into, well, how long the fight was. What is an average between congestion and consolidation? So those numbers are going to vary, and you could start getting into too deep of research that could have some interesting things that don't matter, and that's what we want to avoid. We don't want interesting things that don't matter. That's good. That's good for the intellectuals. Let them worry about it. Talk about interesting things that don't matter. That's what they like to do. What we like to do is make money. So let's look at interesting things that matter and avoid the rest. So yeah, you could say, well, Anthony, in here was good volume. Based on what? Based on the last time it was in a 30-minute range. What are we gauging it on? Every time it's in a 10-cent range in oil, it does X volume. So that's fine, but I think that's a lot more homework. Going back to knowing what we know on this screen, what happens inside of it? Where there's some imbalances, whether they lit up green with edge zones or not, where the speed, in other words, all those little hash marks I made with the yellow marker, I could erase everything, and say the market picked up, then it came down, then it went up fast, then it came down, went up fast, came down fast. There was a lot of chutes and ladders within within the consolidation fight. We're not trying to say necessarily in this lesson that we're trying to buy it at this X or sell it at this X or anything else. We're just saying this is a good enough congestion. This is a good enough congestion area, okay, to be good support if price is above it, or good resistance if price were to be below it. All right. Now, a couple things happen. The greens get extended in here, plus where the stop started. We know about that lesson. I'm not going to say that this is high probability support. I'm going to say it's very high probability support. When you get a congestion zone that had some people fighting, going back and forth, this looked like it was going up, didn't look like it was going down, didn't, that's pretty bloody. So some reds and greens inside the fight. And would you think I was going to pick one that didn't work? The market comes down in here and does what? Beautifully rallies off that area. And again, I didn't have to search hard to find one that works. I just scooted back. I said, this is an interesting congestion area. Let's see if it works. Yeah, of course it works. Let's show it. I want to show some that don't work. But if you were to draw these two yellow lines, these parameters of where the stop started, all right, I got to turn my phone off. Hold on a second. Where the stop started, where's that at? Which would be in here, okay? And where it left the top of this fight, which was back in here, you're going to have to say that's pretty good support. All this creates is less randomness as to why the market came here and stopped. You know, we're trying to strip out randomness and find out good places to see a bounce coming. Comes right back in there again, bounces out of it. So it's not random that the market found support crude oil in these two areas. We're looking for congestion that's qualified. Here's a way to qualify another piece of congestion area. In here, we didn't get a lot of red and green edge zones, but we did get imbalances. They didn't qualify for edge zones. Some screens might. That's an interesting fight. And what was cool is that you had a head fake that could qualify this as being also a winner or a place where the middle of it might be near-term support resistance. And guess what? It wasn't. This wasn't a big fight, or this wasn't even a good identified consolidation zone anyways, you see, because it kind of goes up and then it does that. So what I'm encouraging people to do, hold on, let me read a question I have. All right, so this is crude oil. Let me show some of the zones for people who are asking. For the edge zones, I have it as a threshold of 600 and a min diff of 98 on both the buy and a sell. 600 and a min diff of 98. Crude oil. All right, here. This is a pretty interesting zone, okay? And I don't know if this works. I'm just telling you what people have brought to me. This is the great thing about a good community, is the collaboration that's done of people that just bring powerful things when we're all on top of the right concepts. This is a pretty interesting fight. Why? Because it's got reds and greens in it, right? It's got a pretty defined area. It's not hard to see that there was a consolidation, and it's got a clear winner. All I know is that it's got a clear winner to the downside, and that this area, 50 to 55, should be decent near-term resistance. And it was, but not really in here. You're not going to catch it. It comes back up there. So let's just put these lines around here, like in, oops. All right, good. This one we could keep an eye on. Market hasn't retested it. That's that 50-50 area. Probably good overhead resistance because that's where the bulls lost. That's where the bulls lost. This is what I would want people to do here is close your eyes and run around your house. No. Close your eyes and just take the screen back without knowing anything of what happened. There's different platforms that allow you to do this a little bit more efficiently than I'm doing it. But be able to scroll back and say, all right, I'm going to work on just qualifying consolidation and saying, I just want to know what, I just want to know, I'll open my eyes now. I just want to know, I want to make some good probability decisions or decisions with decent probability based on the information I have on the screen. Because that sharpens your predictive skills to what's going to happen on the right. So this is nothing. This is not overnight. I don't really see anything that I could make a judgment call on. I'm going to just go through. Here we go. This seems like a pretty good consolidation area that I could draw a line through. But let me see. There it is. I got to see a winner. I had to wait for a winner. All right, so there's a winner in here, right here. There's the consolidation fight. You could draw your line, you could pretend like there's a line in here and say they had some reds in here, some greens. They duked it out. They could say this is the congestion box. Was there a clear winner? It seems like it right here around 70 where they jumped down to 60. So I would think that there's good support from 78 because you want to get too high on the consolidation and where the stop started around here. This is just a 9-tick zone, 10-cent zone. That's not very wide in crude oil. And you could see it comes up here one time, but I'm expecting this zone to hold and not go through it. It comes up, holds, comes off a little bit, comes up, comes off a little bit, comes off. So it didn't work great, but it worked. You trade this, you don't have to get, you maybe make money and it didn't work. That's what we're trying to get here. We're trying to get where, how many times does it not work, but you don't have to get killed. See, if this market did this bar a lot here, well then, if that happened a lot, it's not a good concept or, right? It's not a probability that you want to work on. But when you could say that this area in here is going to be some good resistance until it's not, this isn't bad and it doesn't work. Plus it's overnight. Look at the hours. So let's move along and say, you know what? This isn't a bad consolidation. I don't see, this is overnight, mind you, but we're just practicing here. This isn't a bad consolidation. I could put a box around. I see a winner come out. I already seen that it worked one time and coming back. But let's see what this thing does. Hold on one second, guys. All right, sorry about that. So this area, tighten it up and say that it should work between there and there. We're just practicing here. And you could see how it worked. Didn't work perfectly here, but you could see why they couldn't come back to the fight. Now I screwed that up. I gotta close my eyes again and go back a little bit. I advance it to the, let's do it from here. Here's a consolidation fight that is a little choppy, But I could, just the information that I know, I could see that there was a fight. While it's not a perfect rectangle, right? There was a fight in there. We have a winner. Okay. I like old green, old support, new resistance, good resistance. So this 70 to 60 area should be some good overhead resistance. And this is crude oil. Somewhere in there. And of course, it works. I mean, it comes in here, travels out, comes in here again, chops around, but it comes off a good 15 cents. Where the heck was this line in here? All right, so I'm trying to. This is a good area. This is a good zone. So I'm trying to qualify the zones, whether they're laid out by the edge zones, and by also distinguishing there was a winner that took place. So when you have that, tell me this isn't a good support zone. Where do you get killed if you played it? No, you got 15 set head starts in this damn thing, right? And you've got, now remember something. You're looking at playing these reds with a target initially to this green, just based on what it's showing you in real time. And it's giving you that kind of price action to get you in and get out before it were to release against you and go to the upside. So all this is about qualifying either edge zones that are out there of support resistance and where the stop started, which is support resistance, congestion zones, and old support, new resistance, old support, all that stuff. Qualification. If you notice in the education that I lay out there, it's not always where, you watch. Here, I'll draw this out there. This is important because I don't think there's such a thing as to be able to, in this business, to be able to do something where it was a perfect, all right, you're going to learn all these blocks and each session is going to get you to master these blocks. And then once you master all these blocks, up here is your success. You know what I mean? But you gotta master each one of these meetings or blocks and the tracks that's laid out. That's not the way you get successful. Any one of these steps could jump you to be consistent, to turn the light bulb on, to turn the corner, because it's going to be different for different people. I want people to be good at, one of the concepts to always say, I know that there was a fight that was won here, and I'm going to get in there. I knew there was a fight that was lost there, so there's not randomness anymore, and that's your go-to trade. Some of you guys already do this stuff and might have slightly different looks at it. But the qualification of a level could be done by if it was a good fight and you knew there were some bodies buried there. That's what we're looking for. Where are the bodies buried? And if the bodies are buried, if the bulls lose, the bodies are going to make resistance. If the bears lose, the bodies make support or qualify the support. So the edge zones throw in some levels, then you can qualify them with this concept of qualifying congestion. Here's a winner. Let's get rid of these old one. Here's a congestion zone. You could say right in here, right? They fought, duked it out. There were some greens, some reds that came in. Here's the winner, 50, even. So in that 5 cent area, let's get rid of the drawings. Let's throw in a a couple yellow lines to mark this area, and then take our cursor and bring us back. This one we might kind of went over. The market has stayed below there, and there's a reason it's staying below there. It's not, I don't think it's retested that yet. It hasn't. But there's a reason why it stayed below there, and there's noise underneath it. Here's one where this market dukes it out and throws in some red. And cut, here, hold on, I'll say it in a second. Has a winner, has a head fake and a winner. I don't know what happens in here. I kind of do because I've seen it. But when you're looking at this, I don't know that it's going to stop there. But I do know that there's reds that are firing out. And I do know that I qualified congestion that had a clear winner and that had some reds and greens duking it out. So when I come across and I say, I really like these reds now, I qualify them, and then they work, you feel like the trade had the cuts in the wood lined up, and now it looks like a deck. You know what I mean? It looks like a painting. You threw some colors into it, brushed it this way and that way, and someone who doesn't know what they're doing would be like, oh, you screwed that painting up. And after a few more touches, wow, that looks awesome. That always reminded me, I used to watch this guy, I don't know who the hell he was, but broken English. And for some reason, my dad and I would watch him when I was a kid, and he'd draw these beautiful paintings, and it would always be like, oh, he screwed that up. He screwed it up. But, it was really nice, and he threw some kind of color, and it looked like he messed it up, and he worked it around. It looked even better. And unless, you want to be able to say, I could see why this would work, because not every guy is going to have that. It's not just the reds that came in, but it's the reds that came in that showed a winner of a fight. The other reason why I was throwing those blocks up when I showed you that, like, every single class, if you take that, that's going to be your level of expertise. All I'm saying is that, I want people to have a go-to trade where some of my sessions in these track 4 meetings apply more to you than some others. That step 1 series. Everyone's step 1 series is going to be different. It doesn't make it wrong. Unless your step 1 is you're just playing 50% Fibonacci levels. That's all you do. That's a kind of a crappy step 1. But even that, I'd rather hire a guy that was consistent at playing 50% Fibonacci levels and actually executed it than someone who was all over the place trying to execute, 4 or 5 different techniques and weren't consistent any one of them. Didn't have a step 1 defined. Give me a guy who sucks but's consistent, I can work with him. Consistency is a skill set. It really is. It's actually the only thing it's easy for some people to be is a jerk. That's easy. People who are consistently, that seems to be pretty effortless. But everything else takes effort. Would be easy to lose money in trading, right? Would be pretty easy to lose money in trading. You could do it. I could sell bids and buy offers all day long and lose money. Be consistent at something and find your go-to trade and take this stuff. So, people would tell me about qualifying congestion areas, and so I'm going to talk about this. I always make sure nobody has a problem talking about some of the things they bring to me, and when they don't, and 99.9% of the time nobody does, because they understand the collaboration is what's powerful. But then I'll come and add some things, and that's why they share, because they'll be like, well, that person could add something to open my eyes, and the next thing you know, we've got a road built. And the road looks nicer than it did if you did it by yourself. If you want to take an idea, nurture it by yourself, great. You do it with other people, you generally make it better. You collaborate. So you take this congestion idea and say, well, here's a couple ideas where, look at this support getting taken out and how it's nice old resistance. Not every support is old resistance, or not every old support's new resistance. Which ones are better? Which one should I distinguish as this was not only support from the edge zones. And by the way, anybody that, I don't know if there's any people that, how to put it, if you're not excited about these zones, I'm not saying you're wrong, but I'm just going to give you a little bit of background. I showed this to a couple of my prop trader friends, and first I showed it to them. We were out on an iPhone, which, what are you going to see? Then I showed it to them in kind of an environment like this with the screen share, and it's like so much of their work is being done for them. It's, what did young Mike said? He goes, I'm not afraid of missing anything now. I'm not afraid of missing where I think it's going to go and stop, in other words, right? And in fact, it was from him, one of those guys, no, it was him, one of those guys, not even a guy in the Edge group, that said, look at these, if you look to see where these guys beat the SHIT out of each other, he goes, and you throw in some lines there, the ones you want to play. And that's what led me to this meeting. But so the whole thing is that guys that have traded for a long time love it. So everyone should just learn how to use it. Qualify, disqualify, clean some up, and everything else like that. Let's go to another screen. I didn't want to just do this on crude oil. Let's do it on a couple other markets. And just to review, look at, you don't see this with all these reds and all these greens, but the market's so damn slow that, like I said in the trading room earlier this morning, this is the real bid offer. The 02 area and the 05 area. This might be a zone in the future. So you could say, is there a clear winner? Yeah, try to sell it, doesn't work. And I remember in the room saying people sold it in here, took a small loser. That'd be a great trade. Take a shot. But the market's so slow. Let's just go back and do the old close your eyes. All right, close your eyes and go back in time a little bit till you find a clear winner. All right. So in here, I don't know. This isn't a great consolidation chop because it's slow. There's a lot of reds and greens that are sticking, and so this is a fight though, right? And I see a clear winner that comes out. That's why I think it's a fight. It left the box with a winner. So then I come in and I go, can I qualify these two greens? This red is old resistance. This is new support. These three greens. So to me, let me change this. To me, this area is now an area instead of a zone. And sure enough, the market stays on top of it. Does it ever revisit it? No. Such a good area might not ever allow you in. Close your eyes again. Now here's a good one. This is, I think, the gap open. Let's see how they react to where the victory was won. I think, having known this, was the North Korean missile test, I think. So this is a long fight in here. Long fight that finally was won Oh, this was looked like this was overnight session or missile, whatever. A lot of selling that clipped all these areas. 92 quarter roughly up to 94 half. Well, and I'm not doing it because it would have worked better in here, but I gotta take the middle of the range. Look at all this red, right? That's where the stops came out. So this area, and I know it's a couple points wide and a lot could happen, but that's where the bulls lost. And you can see how tough it is to get into the top of that zone, the bottom of the zone, and then the top of it. So there is no randomness when you see that in order to be really good and bullish, you got to get the son of a bit through here, and then they run it, and then they can't get back through it. See that? Do you see how that's not random? When you could go back, find the consolidation, and then see where the winner was, and then draw an area around that. So step one is identify a good fight, and part of that is, was there a victor, a winner, and what does that mean? Man, there's actually one thing I want to add to this is you you could you could say this is a big zone or a big fight. There was a winner and there's overhead resistance, right? But when it's just happening, it's fine, but it's shorter term stuff. Just slightly longer term, not long term, but slightly longer term, when you go back and say there was a big fight that had a winner, because you got more information. Like here, this is a long fight. Let me put a pen on it. This is a long, drawn out fight in this range. Winner to the downside. So I know that information now based on all this. So then I take the middle of it. There's some red you want to include probably on it. And then where the fight was won, which is, in here, that should be overhead resistance, and it is, to the tick a couple times, the area a bunch of times until it's not. Am I saying this should be everyone's go-to trade? No, I'm saying that some people this will fit really well with. If you want to be a little bit more patient, let the trade work, find a bigger area, and not be tick sensitive. That's if you're looking to trade it too close to when the fight was won, then yes, you might be too you're going to be shorter term and in the noise, John. But see these two yellow lines? I don't know what happened or what's going to happen. I could make this as I like 93.75 because it came out of a fight. So I know that. Putting an asterisk on my homework for this level. So I want to sell against it a little bit more aggressively because of it. And if it doesn't work, I don't get my face ripped off. But you can't be like, even if you sold the tick, you lose money on this trade eventually if you sold the tick, right? If you sold at 93.75, you didn't understand what happened to your left. Too many times, because I think what you just said is great, too many times we're part of the fight and we're either on the winning side or the losing side of the fight instead of watching a previous fight to qualify good support resistance. Does that make sense? And too often your recognition skills aren't maybe good enough to know when you should take a loss, take a winner, know who's if you're on the right side or wrong side, because you're in it. Because you're in it. I'm gonna do something here. Hold on. Oh, this goes back too far. These. Here's the thing. If I was just trying to do something with the software. Um, '03 where we closed yesterday. Nasdaq. Here's a fight in here. I just seen what happened, but I'm not sure if this worked. I'm gonna just be completely honest. I'm just going over exercises. I want people to get in with their exercises. Meaning, you got to look at this stuff. Don't just rely on me. But these two yellow lines is where the fight, oh man, where the fight was won. Consolidation, and then the fight was won. And you could see how long that, or how long the bulls stayed in control of this market, which was above this yellow line qualifying these three greens. Does that make sense? Even when they finally got through this green, oh, this is another fight that they win. And look at this. This is a good consolidation in the Nasdaq, right? Where's the winner? There. So I don't know what's going to happen, John. All I know is that if you qualify this as good support based on the right concepts and dynamics, you're not surprised when it works, and you don't get your face lit up when it doesn't. If you notice, every with these, whether these edge zones are a concept that we'll elaborate on, we just always try to take things from a funnel and drill it down into the qualification and roll it out into, well, where am I wrong? Whether I get long or not using this qualification of, hell, this is just a 2 or 3 point NASDAQ zone. If I get long in this zone, where am I wrong? I'm wrong below it. I don't care if it can go to 89 quarter. Maybe I get back into another long. I don't know. But at least I know here's my stop. I can make a good decision as it's going my way or it's chopping around my price. I'm limiting getting my face ripped off. I'm having it run right through me. And I can now get into management. I'm not taking over a plane that's going straight down. Any other questions? If you got any of these edge zones, no, I'm still here. If you got any of these edge zones that there's too many, you've got to switch your min diff out. The other thing I want people, anytime we transition, the ES gets drastically faster or slower, and this week it's gotten slower because it's got a lot to do with these all-time highs. I'm telling you, these blue sky highs they just squeeze the hell out of shorts until they can capitulate most of them out. Then we could head lower, and it's just a boring upside trade. This has a lot to do with the slowness of this market right now. The certainty is there. They're waiting for something to break. Could happen tomorrow with an FOMC surprise. It could happen with North Korea. It could happen with something we're not expecting, and that's what the definition of surprise is. But look at other markets if you're struggling. I mean, some people aren't with the ES. It's too slow. You want to see other trades. Take a look at crude oil. But get into a go-to box. I'm going to stop recording in this session.